Good evening and welcome to another episode of Night Markets. Financial markets close at 5 p.m. and night markets open at 6 to widen the conversation. Each week I'll be giving you my perspective on what's driving markets as well as my point of view as a family office professional. My name is Jacobus Brink, the Chief Investment Officer and Head of Investment Research at SFO. So global markets ended the week fairly mixed as geopolitical tensions and economic data shaped investor sentiment. Rising oil prices driven by the Middle East conflict boosted energy stocks, while US job growth provided some support to broader markets. However, concerns about inflation and interest rates tempered most of the gains we saw during the week. So before we get into macro and markets in the various regions, let's just check in on the current situation in the Middle East. So tensions between Israel and Iran escalated fairly dramatically this week, raising fears of a broader regional war. Israel's assassination of Hezbollah leader Hassan Nasrallah triggered retaliatory missile strikes from Iran, which included 200 missiles at Israel on October the 1st. Israeli airstrikes on Lebanon have also intensified, with ground operations expanding. The conflict has rattled global markets, particularly due to the concerns about oil supply disruptions and potential international involvement. Then starting off with the US markets, so despite the geopolitical turmoil, US markets did post some modest gains, supported mostly by strong jobs data. The Labour Department reported that 254,000 new jobs were added in September, far exceeding expectations. However, rising wages and inflation concerns still pushed Treasury yields to their highest level since August. Federal Reserve Chairman Jerome Powell indicated a cautious approach to future rate cuts, emphasizing flexibility based on upcoming economic data. And then looking at the markets, the S&P 500 ended the week down slightly, losing 0.08%, while the Dow and the Nasdaq remained pretty much unchanged. Then moving across the pond to the Eurozone and the UK, European markets were weighed down by a mix of geopolitical concerns as well as weak economic data. Inflation in the Eurozone fell to 1.8%, which is below the European Central Bank's target, leading to expectations of a rate cut in October. However, caution from ECB officials left investors fairly uncertain. In the UK, energy prices also surged, pressuring the broader market, although Friday's strong US job data did help the S&P 100 recover some of the earlier losses. Inflation worries in the UK also persisted as the Bank of England weighs its next move. Then moving further east, Japan's markets saw declines following the appointment of the new Prime Minister. Initially fairly hawkish, the minister later adopted a more dovish tone on monetary policy, which calmed investors. The yen weakened while 10-year Japanese bond yields rose slightly, reflecting higher US yields. And then moving on to China, stocks rallied on optimism around government stimulus, despite some weak factory activity. Investors remain cautious about the country's property market and fairly sluggish consumer demand, though the Shanghai Composite and the Hang Seng indices both rose sharply. The Chinese market was closed for the majority of the week due to holidays, so it'll be interesting to see how they open when markets start trade again this week. And then moving back locally, South African markets broadly followed global trends, with the JSE Top 40 Index ending lower by 0.75% for the week. A stronger US dollar and geopolitical tensions in the Middle East also drove risk-off sentiment, weakening the rand by a fairly substantial amount. Local energy concerns also weighed on the market as rising electricity costs continue to threaten the local industries. Looking at the markets, the all-share index ended the week 1.42% lower, while the rand lost almost 2% against the US dollar. And then just looking at the week ahead, next week, investors will focus on key US inflation data, with the consumer price index release expected to provide insight into the Federal Reserve's next move on interest rates. US retail sales data and consumer sentiment reports will also be closely watched. In Europe, we'll also see inflation and industrial production numbers from key economies like Germany, while China's trade data will also provide further clues about the effectiveness of recent stimulus measures. Additionally, there will be a number of speeches from Federal Reserve officials as well as ECB and Bank of England officials. These could offer us more clarity on the future moves of monetary policy. And then, as always, we'd like to end off with an interesting investment idea we discussed during the week. We need to talk about inflation. Despite the Fed's recent mega 50 basis point cut in rates and the strong jobs numbers we saw on Friday, yields have started to pop by almost 40% over the last number of days. The cut came despite inflation expectations also still remaining elevated, and with commodities from copper to natural gas higher in excess of 15% over the last month, we could be precipitously close to a repeat of the 1970s. Definitely something for investors to keep in the back of their minds, as history does not always repeat, but it often rhymes. So thank you for joining me again on Night Markets. Financial markets close at 5 p.m. Night Markets opens at 6 to widen the conversation.